All right, today we're going to pull back the curtain on a really powerful signal you see on financial charts, the descending triangle. Now, it might just look like a simple shape, but trust me, it tells this incredible story of a market that's just on the verge of making a big move. So let's dive in and figure out how you can learn to read it.
And you might be wondering, how on earth can a shape predict something as chaotic as the market? And that's a great question. But see, these patterns, they aren't magic. They're basically a visual footprint of a battle, a real tug of war between the buyers trying to push the price up and the sellers who are determined to drag it down. And the descending triangle? Well, that's like the final dramatic chapter of that fight.
Now, these triangles, they're part of a whole family of patterns. You've got your ascending triangle, which hints at an upward move, and the symmetrical one, which is kind of on the fence. But the one we're zeroing in on today is their bearish cousin, the descending triangle.
So what exactly is a descending triangle?
Well, its reputation is pretty clear. It's a bearish signal. And in market speak, bearish basically means there's a really strong feeling that prices are about to head south. To get a bit more technical, it's what we call a bearish continuation pattern. What that means is it doesn't just pop up out of the blue. You'll usually see it form when a stock is already in a downtrend. It's like the market is taking a little pause, just catching its breath, before that downward trend is expected to kick back in and, well, continue.
To really get this, we've got to look under the hood and dissect this pattern. The key is to stop seeing it as just lines on a screen and start seeing it for what it is: the arena for that epic battle between the bulls, the buyers, and the bears, the sellers. Okay, so the pattern has two critical boundaries. Down at the bottom, you have a flat horizontal support line. Think of it like a floor. This is a price level where buyers just keep showing up, defending it, and stopping the price from falling any further. But then you look up top. That's the descending trend line, a ceiling that's actually sloping down. And that tells you everything you need to know. The sellers are getting more and more aggressive, and they're squashing every rally at a lower point than the one before. So here's how it plays out. The price drops, it smacks into that floor, and the buyers manage to push it back up. But the bounce is weak, so it hits the floor again, and the next bounce is even weaker. Each time, the rally runs out of steam sooner, creating that downward sloping ceiling. The price is literally getting squeezed into the corner of the triangle. And you know, just like a coiled spring, all that pressure has to go somewhere.
And yeah, all that built-up pressure, it's got to release. Which brings us to the climax of the whole pattern, the breakout. This is the moment we've all been waiting for. Of course, this is the million-dollar question, right? It looks so clean in a textbook, but in the real world, with all the chaos of a live market, how often does this thing actually work? How reliable is this, really? Well, our source material points to a success rate somewhere between 60 and 75%. Now, let's be clear. In trading, nothing is ever a 100% guarantee. But in a game that's all about probabilities, having odds like that on your side from just a single pattern, that's pretty significant. So here's the kicker, the part that really matters. The pattern is only truly confirmed when the price breaks below that floor, that support level, and, critically, it has to do it with strong momentum. A lazy little drift downwards, that doesn't count. You are looking for a decisive, energetic move that screams, the sellers have won.
Theory is great and all, but seeing is believing. So let's pull up a couple of real-world charts and see this pattern in the wild.
Okay, let's take a look at this first chart here. You can already kind of see the shape forming, right? Let's break down exactly what's going on. So look here, you can see the price testing that flat floor again and again and again. The buyers are holding on for dear life. But every time they manage to push it up, the rally is weaker than the last one, creating that unmistakable sloping ceiling. And then, bam, the floor gives way. That clean, powerful break is exactly what we're talking about, and it led to a pretty big drop. It's a textbook example.
Awesome. Let's check out one more. The key is to be able to spot these things consistently. So let's see if we can find those same core ingredients right here.
And you see the exact same story playing out. The buyers draw their line in the sand, there's the support floor. But the selling pressure from above is just relentless. You can see how each attempt to rally gets cut short sooner and sooner. That pressure cooker keeps building until finally the floor cracks and the price just tumbles. It's such a powerful picture of sellers taking complete control. Now, before we finish up, we have to talk about the single most important thing to remember when you're using this, or really any, chart pattern.
It's so easy to just spot a triangle and get all excited, but if you don't get this final piece of the puzzle, you're kind of missing the point.
And I want to read this directly from the analysis we're looking at because it's so important. These chart patterns can only give good results when combined with the behavior of the price. Let that sink in for a second. See, a pattern isn't some magic formula that works in a vacuum. It's a clue. It's just one chapter in a much bigger story. To really use it the right way, you have to understand the whole narrative that the price is telling you. What's the overall trend? Where's the momentum? What's the general market feeling? The pattern is the tool, sure, but it's your understanding of the bigger picture that really makes it work. So I'll leave you with this final thought. The descending triangle is an amazing clue. It can absolutely show you a potential path the market might take. But the real skill, it isn't just seeing the shape. It's about learning to listen to the entire story that the market is telling you.